The game has changed. While everyone was focused on Bitcoin and the Ethereum ETF saga, the SEC quietly opened the door for the next wave of crypto financial products. And almost nobody saw it coming. This isn't just a rumor from social media anymore, it's real. The recent approval for Grayscale's multi-asset fund, GDLC, to be listed as an ETF has intensified the race for individual XRP, Solana, and Cardano ETFs. In this video, I'm going to break down exactly what just happened, what it means for the market, and which altcoins are now best positioned to capture the coming wave of institutional money. For months, the entire narrative has been a singular focus. First, the spot Bitcoin ETF, and then the spot Ethereum ETF. But one of the most significant developments of the year didn't come with a bang. It came with a whisper. On September 17th, 2025, the SEC approved new generic listing standards for exchanges to list commodity-based, exchange-traded products, a category that now includes crypto. Let me translate that from regulatory jargon into plain English. The SEC just created a much more streamlined process for crypto ETFs. Before this, every single crypto ETF had to go through its own individual, slow, and brutal approval process. It was like asking for permission to build a single car for a single road, one at a time. With this new ruling, the framework is in place. Now, funds that meet certain criteria can be listed much more efficiently. This isn't just about one fund, it's about creating a streamlined path for a whole fleet of them. This signals a massive shift in regulatory thinking, moving from suspicion to integration. The SEC is now using its existing rulebook to bring digital assets into the established financial fold, providing the kind of investor protections and market integrity that institutions have been demanding. So what are these funds that are acting as the catalyst? On September 17, 2025, Grayscale's Digital Large Cap Fund, or GDLC, was approved to be uplisted and trade on the NYSE ARCA. This wasn't a new fund, but its conversion from a private trust to a publicly traded ETF was a huge deal. It wasn't alone either. Shortly after, the SEC also approved the similar crypto index product from Bitwise, the BITW Index ETP, making it clear this was a deliberate step forward. Grayscale's GDLC is designed to track the CoinDesk Large Cap Select Index, which is a basket of some of the largest digital assets. Think of it like a crypto version of the S&P 500. A look at the fund's composition tells you a lot about where institutional interest is focused. For example, in early January 2025, the fund's weighting was around 73.5% Bitcoin and 16% Ethereum. But the rest of the portfolio is the real story here. The fund also held roughly 5% in XRP, 3.8% in Solana, and 1.4% in Cardano. These funds are among the first regulated exchange-traded products in the United States, offering mainstream investors direct, diversified exposure to top-tier altcoins. The approval of GDLC and BITW was a major domino to fall. Now let's break down the top contenders who just got a head start in the race for their own solo ETF. This multi-asset approval sets a powerful precedent. It proves the SEC is willing to look beyond just Bitcoin and Ethereum, igniting a three-way race between the altcoins that are now officially on Wall Street's radar. First up, XRP. Holding a notable allocation in the GDLC and BITW funds, XRP's inclusion is incredibly significant, especially after its multi-year legal battle with the SEC. That lawsuit, which concluded in 2025 with Ripple's partial victory, provided a level of regulatory clarity that was a major milestone for the asset. For institutions, regulatory uncertainty is poison. XRP's legal journey, as painful as it was, has become a key part of its story. With the SEC now including it in regulated funds, the argument for a dedicated spot XRP ETF has grown much stronger. Next, we have the high-growth challenger, Solana. With allocations in both the GDLC and BITW funds, Solana has also secured its spot at the institutional table. Solana's narrative is one of pure performance and explosive ecosystem growth. It's become a hub for developers, new projects, and high transaction volumes, a story that institutions understand perfectly. They see it as the high-growth tech stock of the crypto world. While it may not have the same legal history as XRP, its undeniable market traction and adoption make it a compelling asset for any diversified portfolio. The inclusion in these funds is a vote of confidence that its ecosystem is too significant to ignore, and multiple issuers have already filed for Solana ETFs. Finally, we have the methodical and steady contender, Cardano. Its weighting in these index funds is smaller, but don't let that fool you. Grayscale has offered a single asset Cardano trust for years and filed for a spot Cardano ETF in early 2025, indicating a sustained underlying institutional interest. Cardano's philosophy is built on a slow, academic, peer-reviewed development process. While this has drawn criticism from some, this exact methodical approach is what can resonate with the risk management departments at major financial institutions. Cardano's presence in GDLC and BITW acknowledges its status as a durable, top-tier asset, and it has a proven track record within the Grayscale product family, giving it a solid footing in the race for its own ETF. The race for ETF approval won't be limited to just those three. This new regulatory framework has lanes for other contenders, and a few dark horse candidates are quietly positioning themselves. One of the most compelling is Chainlink. Chainlink isn't trying to be the fastest blockchain or a new form of money. It's the essential Oracle infrastructure that feeds real-world data to the entire blockchain ecosystem. It's the plumbing for DeFi. As institutional players get more sophisticated, they won't just invest in the blockchains, they will invest in the critical infrastructure that makes them work. An investment in Chainlink is a bet on the growth of the entire decentralized economy, making it an attractive play for a future ETF, with filings already submitted by firms like Grayscale and Bitwise. Another dark horse is one of the original altcoins, Litecoin. The analogy has always been simple and powerful. If Bitcoin is digital gold, Litecoin is digital silver. This narrative is incredibly easy for traditional investors to understand. Litecoin has a long, proven track record of security and uptime, and a fair launch with no pre-mine. In a world where regulators are looking to fit crypto into existing commodity frameworks, Litecoin's simplicity and history make it a straightforward candidate for its own spot ETF, with multiple applications already filed. So let's zoom out and connect the dots. The approval of multi-asset crypto funds like GDLC and BITW was step one. It cracked the door open. But the approval of generic listing standards was the move that took the door off its hinges. The next logical step is the arrival of more dedicated single-asset altcoin ETFs. The conversation is no longer about if this will happen, it's about when and in what order. This fundamentally changes the valuation of these assets. For years, a primary barrier for major institutional investment in altcoins was the lack of a regulated, simple investment vehicle. That barrier has now been significantly lowered. This addresses one of the biggest friction points for every crypto investor, accessing the next wave of adoption. This isn't about short-term price movements. This is about a potential re-rating of these digital assets by the global financial system. And all this is happening against what many see as a favorable macroeconomic backdrop. With some expecting potential interest rate cuts from the Federal Reserve, the appetite for risk assets like cryptocurrencies has historically tended to increase. It's a powerful combination of regulatory breakthroughs meeting a potentially favorable economic environment. To wrap this all up, the key takeaways are simple. The SEC has paved a new, faster path for crypto ETFs to come to market. Grayscale's GDLC and Bitwise's BITW were among the first products to drive down this new highway, bringing XRP, Solana, and Cardano along for the ride and giving them an institutional seal of approval. The race for dedicated altcoin ETFs has now entered a new, more intense phase. But I want to know what you think. Which altcoin do you believe will win this next phase of the ETF race? Is it the regulatory progress of XRP, the high-growth story of Solana, or the steady, methodical approach of Cardano? Drop your pick in the comments below. And if you want to make sure you don't miss our next update on this story, make sure you're subscribed with notifications on. This is just the beginning. As always, this is not financial advice. Please do your own research.